So you woke up, hopefully from a full night's sleep, if you weren't too worried about your crypto investments. For those of you who made it through the night, check your pulse. Okay, you're alive, you survived. The good news is it only gets easier from here. If this is your first experience of market volatility with cryptocurrency investments, welcome to the game. What we witnessed the past 2 days is par for the course in a bull market in cryptocurrencies. Now, for those of you with a little bit of whiplash, you wonder what the heck happened. Why did Bitcoin go down to 49,000? Did it go to 48,000? Did it tickle 48,000?
Tickled 48,000.
Tickled $48,000 per Bitcoin. Now it's back up to, last I checked, was around 54,000. So it's still bouncing around quite a bit. Who knows what's going to happen next? But long game, we know what's going to happen next, and that's a beautiful thing. But first, let's do a little bit of looking in the review mirror. What happened on July 31st? In Japan, the government decided to increase interest rates for the first time in 17 years from 0% to 0.25%. So a lot of people around the world, foreign borrowers, were taking out loans in yen and using that for many different reasons, and one of them was to leverage their position in cryptocurrencies. This is a very attractive loan opportunity for those looking to borrow money. So the Japanese yen carry trade is one factor regarding why crypto took a tumble over the weekend. The second factor is one that Toby's been shouting at the rooftops. I'm sure many thousands of you have heard him say this a time or two, that open interest is just too high. Too many people are willing to leverage and gamble too much money on the future price of Bitcoin. So what we saw was a healthy clear out of leveraged traders, which is now sitting at 27 billion open interest for Bitcoin, $10 billion in open interest for Ethereum. So Bitcoin open interest shed $13 billion over the weekend. So that was a healthy cleansing of over-leveraged players. And again, those price points were just easy for the whales to pick off and to send Bitcoin tumbling down because too many people were betting that the price of Bitcoin was going to go up. Someone has to tell these guys, you can just buy and hold spot Bitcoin and see gains without having to risk losing your position during what should be the easiest time to make money in Bitcoin. But people get too greedy, and sometimes it's not enough. Now, Bitcoin wasn't the only thing that was taking a hit over the past few days. The US stock market, the Japanese stock market all took tumbles. But I'm going to read a tweet from Kim.com. I don't agree with everything that he says on Twitter, but I will read you this because it's a good point. He said, as long as the crypto market is tanking in sync with stock markets, people don't understand what crypto is all about. It's not for speculation. It's for your financial freedom, a safe haven from the stock market Ponzi scheme and inflationary money printing. Use crypto as money. There's a huge amount of utility, that potential for crypto that is just not being met. But specifically why Bitcoin took a tumble over the weekend and took more of a hit than the US stock market and saw way more volatility than the stock market over the weekend is because cryptocurrencies trade 24 hours a day, 7 days a week. And you guys might have caught this video from Jack Mallers. He was describing how Bitcoin isn't a hedge against the traditional financial system. It's not a hedge against TradeFi. It is a replacement of it. And an example of that is, number one, there's no plunge protection from Bitcoin and cryptocurrencies. It will be volatile and no one will stop it because the markets are even though there's centralized platforms, there's always DEXs that no one can shut down. But what he also says here is Bitcoin is down because it was the only market open to sell on Sunday night, not because the only fixed supply money we have is now less valuable. Absolutely true. And a lot of people also recognize the fact that because Bitcoin and cryptocurrencies trade over the weekend when traditional markets are closed, it can serve as an indication of what's to come in the traditional markets because Bitcoin is the first thing that people have their access to sell. Maybe might be their first choice, but it's their most available choice. And so what is to come in the traditional markets are soon to follow from what's happening with Bitcoin. And if you want to know why, even though the dollar value of Bitcoin has dropped, the value of Bitcoin is still very much valid and should be considered a high value item for you. Maybe you guys caught what Bukele was saying about US tax system and the treasury bills and the amount of money that the Fed is printing in order to buy back their treasury bills. I saw a document saying that they were prepared to commit to purchasing $30 billion per month to buy back their treasury bills. It's called debt monetization, and if you want to learn more, go into that rabbit hole. That's a good start. Also, I did a video like last month talking about the Fed. I'll link it down below in the video description. It's another introduction to the concept of inflation, to the concept of how it's created and how it affects you, and why you should care if you're an American citizen. If you're an American tax-paying citizen, you should care about this because you will foot the bill of all of these $35 trillion in debt that you're seeing the US is in. It's now way over 100% debt to GDP. That means their debt is way outweighing the amount of value generated from that country. It's because they are betting on the fact that they can use their force to get that money, that value, if they need to, from you, the taxpayer. This is why we are bullish on Bitcoin, ladies and gentlemen. Another just side note here of volatility in the TradeFi market. There is a number of platforms that actually shut down during these times of volatility. Maybe not directly plunge protection, but their own version of this. We had Charles Schwab, TD Ameritrade, Vanguard, E-Trade, and Fidelity all went down. Additionally, Robinhood shut their 24-hour trading option, was no longer available. Suspiciously, though, Coinbase didn't go down. Turns out, I guess we're learning here that Coinbase only malfunctions when the volatility is trending upward, so that not too many people can take their profits, and they'll keep their markets open when prices are trending downward, so then people can panic sell, and their buddies at BlackRock can acquire cheaper Bitcoin. Got to keep an eye on that Coinbase. They're a slippery little entity at this point. And just another side note here, Semler Scientific bought another 101 Bitcoin. So now they're following the strategy of having a Bitcoin treasury, and they're loving it. They're suddenly a relevant company. They're no longer a zombie company like Michael Saylor might have qualified them to be, and they're really enjoying that decision despite the volatility that they're seeing. And I think that's going to be the conclusion that a lot of countries and companies and individuals, corporations are going to come to, is that even the volatility of Bitcoin is worth it to weather through because of the long-term benefits and because of the fundamentals of Bitcoin. They will continue to shine through. If you're not quite understanding the fundamentals of Bitcoin, why it was created, and why you should care about it, I highly recommend you check out my new book. It's now out, called Why Crypto. You can check it out. Go to shop.learningcrypto.com. Link is down below in the video description. Thanks for watching. See you tomorrow.